Good evening, everyone. Welcome to Admiral Markets and this live webinar brought to you here on this 9th of April. My name is Chris and Tarantula is with us as well, and we together will be showing you how to avoid nervousness when you're actually in a setup and perhaps even before the setup, right? We all have different points where we perhaps get a bit shivery about the trade. So we'll be discussing basically trading psychology and how we can improve that to improve our overall performance. Before we discuss the topic, though, be aware that this webinar is intended for a global audience and may not be suitable for everyone. To find out more information on that and other conditions and details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and other financial markets are considered high risk and may not be suitable for everyone. To find out more information on that, please seek the advice of an independent financial advisor. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. We've already discussed it several times, but Admiral Markets has a great special deposit bonus for your initial deposit, whether you're a current client, customer, trader at Admiral Markets, or if you are perhaps a new one, doesn't matter. The first deposit that is done in April will get a bonus. And if you find that interesting, take a look at this link for all the details and conditions. So, with that said, let's take a look at our topic of today. Good evening, usually good evening, Justin, it's good to see you and everyone else. We are going to take a look at why traders get nervous. First of all, why, and then how we can improve, and tactics and tips how to become more sturdier in that department. I will first share my view on this topic, and then halfway, Nanette is going to take over and share his thoughts. So, well, first thing I think is pure and simple the fact that there is pressure, a lot of pressure at times when decisions need to be made. And when we feel that there is no time to make those decisions, when we feel that we cannot accurately review the thoughts and the trade, then we might get nervous about a setup or even during the setup. Why would we get this impression or this feeling? Obviously, price is moving consistently, is ticking up and down, and basically every time we think about it, the price could go a few pips in our way, and we might get a worse entry, or we might miss the trade, or if you're already in the trade, we might see the price go against us, and we already have lost a few pips of profit with hesitation maybe during the exit. So the kind of the emphasis that price moves so fast up and down can kind of make a roller coaster, can make us insecure, and we have the sensation that we must make a decision fast. So it's that pressure of the market that is, I think, very dominant, very difficult to control. It's difficult to set that aside and look at the market and your trading plan with a clear head and try to find the best solution according to our plan. That's not easy when things are developing so quickly in our minds, at least. Sometimes it's actually not that fast, and the market, I think, will slow down as traders get more and more experience. It's almost like anyone who saw the movie The Matrix, right? The whole kind of movie slows down when you see and understand everything a bit more. When you're new to things, obviously, you have less control of the situation, and things will tend to move a lot faster. Obviously, the trading plan is very important, but it doesn't cover, most of the cases, doesn't cover 100% all decisions that are needed. Sometimes it does. If you have an automated robot, it actually does. All decisions are automated. Most trading plans have an element of discretion, at least a bit, some more than others. The more discretion, it's true, the more, of course, there are gray areas, and we might have to make decisions at the spur of the moment. and the heat of the battle, and that's, I think, a spot where our mind is vulnerable to the kind of the tricks that the market can make. The market doesn't make any tricks, but I mean, we perceive it as such that it could be, we are pressured to make decisions. The more discretion we take in our trading, the quicker that could happen, most likely. All right, but even very tight rules-based strategies are vulnerable to us making decisions that are not in line with that plan. So even if the plan is crystal clear, we might divert and change that plan, right? Nothing says that we will always stick to it. We should, but we like to break the rules. So, there are two things. We could break the rules, go against the plan, or the plan might not even indicate what we should do. So in both cases, we're going to have sometimes problems with the nervousness. So all of that, what does that lead to? Well, it leads to emotionally based decisions, basically. The more pressure, the more emotions come into play. Oh, what if that happens? Or what about that? If that and that happens, then I will lose that and that. We start to theorize and think about all kinds of scenarios that are not playing or haven't happened at all, but do in our minds. So we are getting into a state of mind, in a framework where we're kind of making ourselves nervous in a way, right? We are anticipating things that, the worst basically, and things that might not even happen. We're guessing, and we're changing our plans. If we don't make a decision, we're just postponing the pain, and if we do, we also have regret afterwards. So there are a lot of kind of pitfalls. There are a lot of ups and downs in the emotional roller coaster when going through that trade, and that's very tiring. It's very there's a lot of kind of emotional drainage in that. When you live through a roller coaster like that, it's already quite demanding. And if we live a couple of trades or do a couple of trades like that in a day, it's exhaustive, in fact. And it's not good for the long term, because that exhaustion just works on our nerves, our whole body basically, and we'll be tired at the end of the day. We want to trade as much as we can in a relaxed atmosphere, because it's just good for our mental state, it's good for our body, it reduces stress, and we'll be also more fit actually the next day and during our free time. So in all aspects, it's good to reduce that stress so that we're not taking a toll on our physical and mental state. So this, I guess we've already talked about it, in fact, in previous slides, but yeah, the pressure just increases in numerous spots. I'm sure you're aware of that at one point or another in your trading career. The funny thing is, some of us will have it at different spots. Some of us will have it when we expect to lose, or when we expect to win, or when we're close to the target, or when you're close to the stop loss. Maybe I can ask you, just for the fun of it, to get an idea with our audience today, where do you see the most pressure? Where do you see the most nervousness? And we can maybe get a feeling which is the most, let's say, the spot where it happens the most. For me, personally, I get it the most if I have the TP and price is close to it. I get a bit antsy because I know that I'm already 5 pips away and I'm locking in. I have potentially X amount, let's say 50 open profit, and I need 5 more, and that's where I sometimes tend to close the trade earlier than my TP. That's my weakness, personally, for instance, right? But for someone else, it could be totally different. Marjorie has the same, also with TP. So for me, one of those solutions, if you have that, just as a side note, is that I start sometimes without a TP, because I don't have that, that pressure. But then if I see the trade has gone away and is showing divergence, then I start to maybe think about trail and TP combinations. But that gives me a bit more kind of air, in a way, more space in my mind. Let's see. Justina says, I feel most pressure where to open trade and where to put the stop loss. And Vlad is when it's getting close to the stop loss. Cool. So yeah, indeed, actually there's a common thread here. Is actually decision spots about, of course, opening and exiting most of the time, or making a decision about that, and or getting close to the stop loss. Let's see, MJ saying making stupid mistakes. Yeah, can imagine. So let's talk about solutions now, and see if at the end of the webinar, hopefully we can improve on that. To stabilize emotions, I think that basically if we can regain control and patience in our mind, I think what we need to is kind of, the market, if you will, is trying to eat at our inner peace. In a way, it sounds quite heavy, but it's trying to kind of destabilize us. If we're a tank, or if we're like, you know, a car, it's like this wind trying to rock the car, right? And what we're trying to maintain is that straight path. So we want to be as stable as possible, because that gives us the opportunity to make the best decisions. As soon as we get into this trap of making emotionally based decisions, we're running big risks about suboptimal decisions. So what I'm trying to get, the point I'm trying to make, is that we should control, we should dominate our mind in a way. We should be the ones in control. We should not allow the market to push into our mind and try to kind of like influence or impact our speed at which we take the decision and the process in which we do it. If there is a need on the chart to do this, you might want to think about trading on a higher time frame. If you think you're in control, if you feel that you're emotionally stable but still don't have enough time, perhaps you're trading on a too fast time frame. If you're trading on a 5-minute chart, but you like to think about things longer than actually the chart allows, maybe you want to trade hourly. That will give you plenty of time, right? That will be enough time to look at everything. So that would be maybe another aspect to look at. The main thing is to, and this might sound a bit, a bit strange to some of you, but try to stay in your comfort zone, if that makes sense. In your comfort zone, that you're not being pushed into a uncomfortable kind of forced decision to make now. So how do we do that? Well, one way, a technique, if you're not at that point right now, right, if you think that you're not that far yet, one way to do that is using this technique, what I call the wait one candle before deciding. And that helps us, that forces us to take that mental break. The wait one candle technique is basically saying, okay, I want to make a decision now, right? I feel that I must, but when you feel that you must make a decision, you're actually, the rule states that you must wait actually one candle before making a decision. So let's say you're looking at a 1-hour chart and you feel pressure to take a decision. The rule states that you actually have to wait for this candle to close, the next one to close, right? Then one candle, one full candle to wait, and then you can take the decision. Or at least one candle, not necessarily 2 candles, but at least one candle. That means that you are forced by a rule to wait before taking a decision. Other things, I hope that's clear. I maybe can grab a chart perhaps. Hang on. Alrighty. For instance, today, pound New Zealand, I took a trade here at around 196.50, right? Now, this is not an example of my 1-bar technique, by the way, but if you feel nervous, let's say you take this trade right in here, like I did, and you feel nervous about it, hypothetically, right? And you're thinking about taking it off here, for instance, because you see that there's a wick here and there's a doji. So you feel uncomfortable about that trade. You think that it might retrace a bit deeper. Let me go to that spot. So you feel pressure to do that, but you wait one bar. Now in this case, this is an excellent, of course, bar. That it's not always the case. But the whole idea is not necessarily that the next bar will always be the fantastic answer, but is to create the effect that we have the time. We're not letting ourselves be rushed. In this case, of course, the bar is negative, bearish, and provides a good support for us to continue with that trade. Sometimes, obviously, we're going to get bullish bars and then continuation to the downside. It's not necessary to say that that is the bar that will always give us the answer, but it's supposed to give us that rest in mind, right? And this was a particularly nice trade because there was indeed a good momentum to the downside. I entered on this bar personally, but the idea is that if you wanted to exit, right? If you wanted to exit the trade on this one or this one, on this one because you see a wick, you entered on this one, you see a wick. It's just a hypothetical situation. I'm just trying to explain that by waiting one bar, simply you could create more patience. That's the idea. If I think what you mean is, if you, let's say, you think about entering, I think what you mean is here. Let's say you feel pressure to enter on this bar, right? And you don't, you wait one bar and you enter on this one. Would you still do that even though that this bar is 36 pips lower? Maybe that's your question. And you are right that this technique has that danger. It's not something that is always perfect. If you, in most cases in the Forex, things go slow. Things take their time, things correct and retrace. But occasionally, you do have moments where the momentum is happening right here, right now. And that is, unfortunately, indeed, the moment where if you don't take a trade, the trade could potentially be lost. It can happen. I'm not going to kid around with it. Those moments do exist. So it's not like this strange idea that sometimes we have that pressure. The market structure sometimes could certainly be so that if we don't take a trade, it can continue, like with this pound New Zealand. To be honest, even if we would have taken it here, if you take a stop loss just above L3, there was still enough space, right? So it depends if you take that trade or not. I mean, now we can see in retrospect that it would still be enough space or enough movement. That's easy to say in retrospect, of course. It's a difficult call, though, if it's live, obviously, because then you just lost 30 pips, and that's not easy to take. So yes, at some point, you might lose a trade if you wait one bar. That's the disadvantage. Taking breaths and taking breaks away from PC. So basically not focusing consistently on the market and charts. Not always keeping an eye on every single tick. So especially when you've already entered the trade, do not needlessly look at the charts. That's specifically for trade management. So when a trade is taken on the hourly chart, you don't want to consistently look minute by minute at the chart to see how it goes, because anyhow, we got 1 minute bar, so a 1 hour bar, so we need a 1 hour before this bar is finished. Looking at it consistently just could create nervousness. We start to reanalyze the setup, start to reconfigure our analysis, and before we know it, we just created nervousness in us because we look at it from a different angle and we second guess our initial analysis. And that will only lead to more problems. So by looking at the charts too much after entry, we're creating a context where we're actually reanalyzing everything from scratch most of the time, and obviously we're going to see things, more negative things that we didn't see before. Before we take the trade, we're seeing only good things most of the time, trade things that make us want to take the trade. And after the trade is taken, we only see negative things. So you get this pattern where we're entering trades too fast, but then exiting too fast too. And what we want is actually the opposite. Patience with the entry most of the time, at least in planning the entry. We want to take the time with planning. Sometimes executing has to go fast, like Vlad was asking. Sometimes, yes, sometimes we have to react fast. The whole idea is plan with patience, but when we have the plan ready, yes, then of course we have to be ready to execute. We have to be ready to indeed participate. And then we have to be, we have to have action, be action ready. So when I say, patience, 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 yes, to a certain degree, yes, but then we have to also be kind of with energy ready to take that trade and be ready to pounce on it in a way. Look at it like setting a trap in a way, right? We're setting a trap with patience, and when we execute it, the plan, then it goes fast in a way, right? But at least we're all prepared in how we want to tackle the market. That's basically what I mean. So after we've entered, then we also want to have patience. Especially at the beginning of the trade, you want to give it some time, but we can definitely lose some of that patience, justly so, and demand more from that trade when we've already given it some time. When, for instance, if we're looking at the hourly and you've been in that trade 5 bars already, it hasn't gone anywhere our way, then you might want to reconsider that trade. Justly so. And that's not impatience, that's just a justified kind of demand from you and your trade that it certainly should go in your direction at one point. In most cases, it depends from strategy to strategy too. Alrighty, focus on higher probability setups. Yeah, that's a bit of a general kind of observation, but true. I mean, the higher the probability, obviously, the easier it is. If you have a setup that has a 35% win chance but goes for a whacking 5-1 R2R, that's great in terms of money management, but doesn't really give us maybe a lot of confidence. I think I meant use a less discretionary trading plan, not more, but that would make sense. I mean, if you use a more discretionary, less discretionary trading plan, more rules-based, it's going to be easier to make those decisions because they're set in stone. So you're going to have less nervousness about those decisions. Point 6 is the fact that we're balancing our emotions. We don't want to be overconfident and we don't want to be underconfident or overexcited. So what I mean with that is when we approach the market, some people tend to say and think that they know everything and know for sure that this trade setup is going to win. Others are actually very insecure, and it's about halfway that's optimal. We want to respect the market. We want to be aware that the market can do anything at any time, and we never know 100% what the market will be doing anyhow. So we must respect the market as an object that will do what it wants to do, and we cannot influence it. And that's fine, but just the fact that the market can do what it wants to do doesn't mean we have to be insecure about our trading plan. So we should be secure about ourselves as traders and our trading plan, but respective of the movements and the way the market behaves. So the insecurity of the market should not affect us as traders, and our confidence of ourselves should not affect the overconfidence in analyzing the markets. That balance. I think risking small helps as well. So if we take lower risks, it's going to be easier to maintain the emotional stability and balance throughout the trade. Obviously, if you're trading for your level of risk tolerance, with high risk, say you consider 1% risk okay. And then if you start trading with 3%, this is going to heavily impact the way you look at the trade because it's going to be a lot of money and you're going to be thinking about the loss and the profit too much. Don't choke the trade management by zooming into lower time frames. So if you're trading the 1 hour chart, not only skip staring at the 1 hour chart the whole hour, but look at other pairs, or I don't know, do something else, or do more analysis, or don't zoom in, which is even worse. If you take it on a 1 hour chart, don't start looking at the 5-minute chart, unless your plan specifically says you should, of course, logically. But if you take the trade on the hourly and it says manage it on the 4 hour chart, don't look at the 5-minute chart, don't look at the 15-minute chart, because you're going to see things that are not relevant for your decision regarding the trade. If you see a 50-minute pin bar, but you should be managing it on a 4 hour chart, that 50-minute pin bar doesn't matter at all. But if you see it, it might influence you. If you, of course, can look at the 50-minute chart without being impacted, fine. But if you get nervous from looking at the 15, don't do it. Something that is important with regard to trying to find something that's suitable for yourself. So something that matches how you trade. Everyone has their own weaknesses and strengths. So try to find something, a trade management and strategy that matches how you like to trade. Some of us like trailing stops. Others like set and forget strategies. Others like to trade one pair. Others like to trade a range of pairs. Others like to use certain tools and indicators that I don't use, right? So there's a whole range of things. So I'm going to pass it over to Ned in just a few minutes. Before I do that, though, let me take a look at the things that you've mentioned before. Let's see. Yen, for instance, I actually missed your comment. Let's see. Yen is talking about a long on the pound dollar. Let's see. Why the hesitation when going long right now in the cable at support seems a good plan. Hesitation occurs if you don't have enough maybe faith in the trading, in the trade idea, in the analysis, in the confirmation. So you might want to wait for more confirmation. And you might want to establish a level on the chart or a sequence of events like, okay, I want price to reach this level and I want it to show then a particular candlestick pattern, and then I'll take it. By setting up boundaries, basically where you want to trade it and how, you're creating a trading plan that says, okay, I'm interested, but I still need more development. I still need a trigger. What I often use is decision moments, decision spots, in combination with triggers. So I identify a zone that I find interesting. Let's say the odd USD is trending up, so I'm interested in price getting to a certain support level. So that's my trigger, and I would be waiting for a 4 hour or 1 hour, price action at that support level, and that's where I trade it. Right? So the price action at that zone is kind of the decision spot plus trigger. The support level is the decision spot, and the candlestick is the trigger. That could help if you have doubts about the trade. Maybe you want to add more confirmation or add more, kind of extra checks before taking that trade. Let's see. Justinus mentioned opening the trade and where to put the stop loss. So if you have pressure with opening the trade, and one of the ideas you could do is think about a pending order. It doesn't have to be a pending order that's very far away, but it could be a small pullback. It could be a small break. If you look, for instance, Here, if you have trouble with taking an entry here, you might want to wait for one of these candle breaks or wait for a retracement of the candle and place a pending order. Because when you put a pending order instead of a market order, you're shifting the responsibility from yourself to the market. When you take the market order, it's you who takes the trade. But if you have a pending order, you get filled by the market. That happens automatically. Or it doesn't happen, but it's not in your control anymore. I think the problem when you have that, I think, for most people, is that you're in control of that situation. So if you have pressure to open a trade, pending orders could help. And once again, they don't have to be pending orders 100 pips away from now. Most people think pending orders are, very far things, but you can use it 10 pips, 15 pips away, right? Doesn't have to be far. Where to put the stop loss? Some people have anxiety about far stop losses. Some people have anxiety about getting stop losses close by. I don't know which one you prefer, but putting a stop loss that is a bit further than you might originally want also helps with keeping the losses small, because most of the time you have more options. Obviously, you don't want a massive stop loss either, because then you're just risking too much. But sometimes giving a bit more space could ease the psychological pressure, or using a tighter one. It really depends what's your starting point now, right? For instance, the odd USD on Tuesday. We're looking at the odd USD. It's a while ago, I know. Hang on, it was. Let me think. It was here. And I was saying, okay, this is a potential long because there was momentum up, but we have to use a tight stop loss below the candle, just literally below the candle low. That might be a solution for you if you think that a wider stop loss is making you nervous. A tighter one could help, for instance, right? But we'd have to trail stop it. No, it was actually here. But we have to trail stop each candle low because we don't want to get stuck and caught in a retracement like this. So indeed, it was right here actually. And each candle low, and we eventually got 25 pips out of that trade. The risk was 25, so it was still a nice one-to-one, and it was a trail. So it could have gone further as well. So in this regard, we have a candle here, and we use this low as a stop loss. It's a very tight stop loss, but sometimes it makes us less nervous because we know that we can exit that trade faster as well. The opposite could be true too. If you want to keep that trade longer and you think that this is too tight, then maybe using a looser one is better. So maybe the distance could help. When price gets closer to the stop loss. All right. That's something that I guess not looking at the charts probably. I think it's the only way, to be honest. When you're in the trade and it's getting close to the stop loss, there's nothing we can do except actually exit too soon than our plan says. And, well, probably not looking at the chart anyhow, because we cannot do much probably in that case. Might be the best. Yeah, so that's it from my side. Thank you so much, and I'm going to pass it over to Nenad.
Thank you, Chris. Excellent presentation. And you got a point. Basically, all of this to which Chris was talking about, you should always try to memorize it, and we are always talking from our personal experience. And today what I want to share with you is basically tips and tricks how you should basically stay out of trades if you're nervous, and steps which you shouldn't make when you're trading, which will definitely make you relax before trading. So today's agenda, for my part, would be being nervous, anxious, spiral of doom, and steps to relax before trading. Okay, trading anxiety anxiety usually happens if we take some trades but without any technical meaning or any technical analysis which we did prior to that. If we, for example, step in a trade and we are not sure that at least 70% that our trade could hit our target, then we will start to be very, very anxious. Or maybe if we started to be very optimistic about the trades and then suddenly we have a losing streak, then we will again become anxious. So those are the steps which have a deeper meaning in your psychology. Trading anxiety is very, I need to say that, popular among whole number of different traders and including professional traders. So being anxious can really destroy your account, because if you're nervous, then probably there is a big probability you will be making revenge trades. And revenge trades, if you make it, those, and I know that at least a huge majority of you who are attending, at least once in their forex career have made revenge trades. So being nervous and anxious will definitely not help you. Better stay away from trading, step away from the monitor, and try to relax at some other place. Anxiety will lead you to the loss of confidence, especially if you had winning streaks and then suddenly you get into a losing spiral, eventually closing your month with a huge loss. That shouldn't basically, it's a punch to the face, yes, I know, and it shouldn't basically keep you away from trading. But the thing is, the only thing you should take care after it happens is you and yourself, because still it has a lot of things in common with your psychology. Fear of mistakes also. Fear of mistakes, you should never ever be feared of your mistakes, because very often you are not the cause of a loss in your account. And sometimes even being a perfect technical analyst and trader will definitely show you that no one is perfect. You will have losses from time to time, because that is the part how market works. Okay? That is always the case. Do not be feared of mistakes, because as I told you many times, very often you're right, you're correct, but just market is doing something which you couldn't have anticipated. Also, fear of mistakes. If several people have been working on the same account, you should always think about it twice. For example, in my forex career, I have been working with a lot of other traders, and we have been working with the same accounts. And sometimes if your colleague is telling you, okay, now this is, I'm 90% sure this is the trade of the month, trade of the week, and you enter with a huge volume, with a huge leverage, and you lose the trade, then guys, it's not your mistake. Okay, everyone can make mistake, but it wasn't your particular trade. You have listened to your friend, you have listened to your colleague. He's also maybe a good trader. Maybe you saw the market exactly the same, but because your opinions were perfect, in a perfect confluence, you entered with a triple size instead of normal size. That is okay, it's a mistake. But you know, it's not your personal mistake. It's not that your technical analysis and analysis generally was not right. You just made a mistake by tripling your volume traded. Not being objective also, you should always try to be objective in trading and accept the things as they are. If you're losing, then try to comprehend the things why you're losing. Try to see into a deeper, don't just try to observe one tree. Try to observe the whole wood. So why forest? Why are you losing? What are the causes of your losing streaks? Is that your family? Are you nervous? Is that your friend? Is that your market? Many times your trades will be good because you have a system. You know what to do. Maybe it's your money management. Maybe because of that you're feeling scared. Gut feeling is not a thing which you should always use in your trading. It's okay to have a gut feeling because it will help your trades, but do not base your trades on your gut feeling. If you see that the price is going up, for example, you see that the price is going down, okay? And then you see that the price is heading up, and suddenly it made a new high. It doesn't necessarily mean that the price will rise from this point, because it's a downtrend. It may reject, and if you were long here, then it's your double loss. So being short, okay, it doesn't mean that you will lose this trade. If you're sure about the trade, make a dead stop. If you risk 0.5% per this trade, per each trade, and your trade is, let's say, 0.5% negative, try to raise to 1%. Maybe you should a little bit put your stop loss. It's called dead stop. And then it's better than to go long here just because the market has made a higher low. Okay, you know what I'm talking about. Have you seen Euro GBP analysis today? Yeah, I saw a lot of people that basically were telling me, and I had a discussion that Euro GBP will go up. But today I was definitely sure that Euro GBP will go down. And yes, it made a pattern like this, basically breaking through previous resistance, but this was the place where I wanted to go down, where I wanted to go short, not long. Not just because maybe I had a feeling that my trade would go in a slight drawdown. It doesn't matter. Still, I will put my stop loss in a risk zone, and then I will wait. And what happened? 30, 35 pips of a profit, not bad for the pair, which moves 50, 60 pip per day. So it's good, even though gut feeling may have been wrong. Clouding your judgment, definitely, by reading, I don't know, 10 tons of analysis. It will cloud your judgment. It will make you nervous. I say, for example, euro dollar maybe could reject from 1.80 towards 1.0660. Maybe other analyst is saying, okay, I will get in a long position, and then you're not sure basically whether to go long or short. Just a quick guys, sound check. Darshan is saying there is no sound and the screen is frozen. Can you confirm that you see the screen? You see my red pen? Yeah, all is good. So all is good. So yeah, I don't know. Maybe Darshan, you should try to relog. Okay, try to relog. If you don't see the chart, so reading tons of analysis will cloud your judgment, especially if you want to, I don't know, if your system is saying, yeah, euro dollar will go down, and I don't know, me and Chris are seeing the same picture. Why would you go, I don't know, to other website and read other forms of analysis? It will definitely cloud your judgment. Okay, never ever cloud. Yeah, remember 1st of January 15, guys, never trade without stop loss. It's always the most important part of your trading. Put your stop loss. Unless, guys, you can trade without stop loss using your full margin, but only if you want to invest more. If you are losing whole number of trades and your account is in a huge drawdown, and there is no way you can, I don't know, you're very nervous, you can't wait for I don't know, 100 pip win, then leave your trade, risk everything, but don't be nervous. It's your choice. It's your choice. Okay? If you have more money to invest in trading, okay, you try to invest. But if you want to raise your account in a proper way, you should always use a stop loss. Now, I'm not saying how you should recuperate your account and basically try to cover up for 60% of a loss. If that is the case, well, it's up to you. You can risk everything. You can still go with proper trading, going with the stop loss, but it will go slower. But again, it's up to you. My suggestion is always use stop loss, always. Mike Tyson once said, and that is perfectly true, everyone has a plan until they get punched in the face. Until they get punched in the face. That is always the case. We always have a good plan, and then when we get kicked by a market, nervous market, we are not nervous, but market is nervous, then what then? You should always have a plan even when you are getting punched, like a body bag. Always, guys. Like a punch bag. Okay? Emotional guidance, we talked about this already. Upward spiral, downward spiral. I need to mention it again. When you start to trade, guys, think of support. This is support. Okay, this is support here. And this is basically when it gets bad. And it gets worse. Okay, and it gets the worst. Okay, when you start to trade, you want to go the same, you want to have the same flow as the price action. So you will be starting from the support, not breaking the support towards resistance. When you start to trade, you should be either optimistic, hopeful, or content. These are 3 points from your psychological state of mind where you should start your trading day. Never ever try to start here or here, because if you start here and you start to lose, you will drop. Eventually, you will be sucked into a spiral of doom. Do not let it happen. So by taking the steps toward being relaxed, and I will show you what you can do to relax yourself, you will start your trading day being either optimistic, hopeful, or content. I'm usually optimistic when I start the day. I know that because I love to trade, and when I wake up, I usually do my analysis, and then I wait for the trade setups. Can you guys confirm that you are seeing the spiral of doom slide? I want you to be, yeah, great, excellent. So try to start optimistic, okay? Because once you're in the profit, you will be getting from the support zone, observe this as price action, from the support, okay, towards the resistance. And here, at this time, when you're very enthusiastic, when you're so ecstatic about your trade, exit the trade. Exit the trade. Do not rush into another trade, because you're rushing here at this point, and there is eventually there is a big chance that you will lose your trade because you have chosen to trade when you are fully touched the resistance, your psychological resistance. Okay? Always try to observe the spiral of doom, this upward spiral. This is not spiral of doom, this is spiral of doom. Try to observe this spiral and say, great, I'm in a trade, I will close the trade once I'm very content with number of pips, not with money. Of course, this should be aligned with your technical analysis, but it's you, it's your psychology. If you take the trade when you're here, saying, great, I'm the best, this is my winning day, usually what will happen, bang, down we go. And if we break this support level, believe me guys, it's much easier to trade from this support zone than to trade if you drop where this support has become resistance. It's very hard to go from here to here. It's easier to go from here to here than from this point to this point, breaking here. Very hard. So if you get into a spiral of doom, we talked about it, you will be nervous, but not just nervous. You will have doubts about yourself, your trading system, your methodology. You will worry about your trade. You will blame market. You will blame your friend. You will be discouraged. You will be angry. Revenge trade, hatred. You will curse everything which share similar emotions. You will curse everyone who gets into your vicinity where you are angry. Do not let it happen. If you get lost here and you are pessimistic about the trade or you are disappointed, remember this, what we were talking about, and let it go. Let it go. Humans are adaptable beings. One of the biggest advantage of human being and human nature is that we can adapt to every condition. Believe me, if this happens, there is only a single moment in your life that will not make a difference in your life. There is always another day. There is always another trade. There is always great things which will happen to you. And market will be always here. Stop trading, let it go, and there will be another trading opportunity. What are the steps to relax yourself? First and foremost, lower your risk. Lower your risk. That is the most important point. Even if you're wrong, you won't lose much. If you're right, you won't get that much. But you will be relaxed. Believe me guys, trading 0.3%, trading 0.3 lots on $10,000 account with, let's say, 30 pip of a stop loss is totally relaxed trading. Believe me. But if you try to take 2-lot trades on $10,000 account with 30 pip stop, then you will definitely be nervous. I know that. You won't be nervous while you're winning the trades. But once you start losing the trades, then you will be nervous. I know that you will be nervous. Because there will always be some losing trades. And there will always be trades which you think they are perfect, but they won't show up as perfect. Do not forget it. Try to focus on pips, not the money. Try to definitely watch pip number, pip count, not the money count. It will be easier for you. Focus on the process. Okay? Focus, guys, on a process. Don't focus just the profits. For getting that perfect trade may be difficult for some because that could be misinterpreted as a lack of ambition. I said it correctly, yes. And if it's true for you, then you should set goals based on the process and not on your profits, which has the same meaning as focus on pips, not the money, okay? For example, you can give yourself points to sticking to your trading plan for cutting your losses or pressing to your advantage. But at the end of each trading day, you should ask yourself, did I execute my trades I should have to, Did I make proper adjustments? Did I manage my risk? Try to manage your risk trade practices. Okay? If you are not sure what to do, and if you are not sure what to trade, guys, let it be for some time. Let it be. Unplug yourself. After a major loss, it's very important that you take some time off. Avoid the need to immediately jump back to your profits. It's called revenge trading. It's better to come back after you feel well rested, calm, and clear-headed. Beating your emotions is the most difficult thing. I'm sure about it. The most difficult thing is beating your emotions. If you recognize that you're being overly emotional, try to avoid compounding your mistake, because compounding your mistakes will lead you to triple the loss. Keep the journal up. Learn to trade as a professional. Trading anxiety can ruin your day if you don't handle it properly. Turn your monitors off. Keep the journal up. Market will be there. Trail the stop if you are in the profit, but you are not sure because the trade is hitting resistance and it's hitting support. It cannot break it. Why would you risk? Try to trail your stop. Manage your risk. Put your stop loss to break even, or put your stop loss to break even plus 10 pips, so you will be in profit and you will be in a free ride. If there is momentum, maybe you can get 50, 60, 70% of the profit. Modern is saying it's tough to get to that point. Yes, but eventually you will get to that point. It's to do with your emotions, with your psychology. Try. That is why we are talking about it now. Do not drink. I personally have met a good trader from Forex Factory. Obviously, I won't mention his name because he is well known also in Forex Factory, and he's keeping a good trend on Forex Factory. And that guy was a good trader. I haven't heard from him, I think, in last couple of years. I don't know what's happened to him. And he was one of the most influential members in Forex Factory. And what happened, he was drinking too much. And when he starts to lose, and actually he was a good trader, but when he starts to lose, he gets drinking. You know the adage and saying, when the going gets tough, we go drinking. That's not, you should avoid that. That is basically clouding your real state of mind. And if you start to drink like he did, you will make a lot of mistakes. He was coming to different trades. He tried to quarrel with as many traders as he could see online at that point. He was ruining his life with the drink. He was ruining his trades with drinking. And believe me, drink is not the answer if you are nervous. Risk as much as you can afford. Always try to risk as much as you can afford. If you are still nervous and you cannot calm down, step away from the screen. That means, believe me guys, being nervous is also overtrading. It manifests as overtrading. Okay? The internal pressure of our mind and mindset of making money will definitely blind our rational thinking. So instead of sticking to our trading plan, we just let our emotions trade. When that happens, that means that we don't trade rationally. Our trading plan is not trading. Our emotions are trading. If your emotions are trading, 90% of the time you will lose. Overwhelmed with the need to cover the losses, we usually end up taking one trade after another, and before we knew it, we'll already lost so much money. The most obvious solution is to step away from the screen once you have hit your maximum trading loss. There will always be tomorrow for those who choose to preserve their capital. For those who don't and blow their capital and account, there is always goodbye, good day, whatever, but there won't be trading anymore. Goodbye to trading. You need money to trade. You need to preserve your capital. Okay? And there will always be tomorrow for those who know how to preserve the capital. Find a hobby. Find a sport. Go and try to run, to jog. Try to play soccer, football, basketball. Try to find your favorite sport. Go to martial arts. Punch the bag. Go to and punch the punching bag. Try something. Sitting in front of the screen is not always good for your health, and it will make you more nervous. So try to find a hobby or sport. Set realistic expectations. Do not long for 100% per year. Be realistic. I always will remind you, banks will give you 1 to 3% per year. Per year, guys. Don't be ecstatic. We talked about spiral of doom. If you're ecstatic, and two, it's still the form of anxiousness, being ecstatic. It will definitely ruin your day. If you made profits and you're ecstatic, do not go for another trade. If it's a loss, it will ruin your day. Definitely. Okay? Try to do this. Try to do these steps. Get alive, guys. Okay? Don't pull all your eggs, as we say, in one basket. If you do, you will only subject yourself to unnecessary stress. Okay? If you still feel that it's coming on, just step away from the screen. And remember, perfect trading performance and trade setup don't exist. 70–80% of the time, if you're good, you will still be good. But backtrack to the realistic expectations. And believe me, if you keep your journal and keep your emotions controlled, it will turn your trading around. So this is everything I had for you guys. And me and Chris really are talking from our experience, and this is what you should definitely pay attention to if you still experience anxiety while you're trading. I don't see any questions, so I hope that you enjoyed the webinar. We will be here with you very, very soon. Sign up for upcoming webinars, live trading lab with Chris, weekly Forex recap. We will be having it on Monday, and try not to be nervous while you trade. Listen to this webinar. It will be uploaded as many times as you can until you get these points into your head forever and ever. It will help you, because I'm sure that 80% of the time we lose because of our emotions, not because of our trading system and trading plan. Our emotions. Thank you once more. We'll talk to you soon. Cheers, and as always, trade safe.